I'll take you through module 4, which is the ethical and responsible sourcing in supply chain. It's 3 hours, but should you have questions during the presentation, I might not be able to see your hand being raised. Just, I think Sari or Malik will be able to assist me in that regard. I'll give a high level, but I'll also try to here and there look at exam techniques that you can apply in order for you to be successful in the exams. I'm not going to talk much about Commerce Edge. Sari has already covered that. Got 4 divisions. One deals with training in procurement and supply. The other division is education. The other division is smart development. Maybe we know it as smart procurement. And then the 4th division is the learning innovation, which basically helps us with instructional design. So that's Commerce Edge in a nutshell. Important to mention is the Da Vinci Institute. What we have done is to articulate the CIPS qualifications into the CHE, Council on Higher Education, where individuals who have completed the CIPS level 6, now they can do their MBL through the Da Vinci Institute. I'm not going to cover that. Probably let me go straight onto this slide. What you see on the screen is the 13 steps under which procurement is undertaken. This is your procurement cycle. So there are 13 steps. Now, what we have done, this is important that I emphasize this point here, because it has got a bearing in the way in which you understand the content and in the right context. We've got 13 steps. Okay. The first step is about developing the business needs, okay, which is your justification for the procurement. The second step is where you deal with your commodity options that will then inform your procurement strategy. You do your market analysis, you do your make or buy decisions. Do you do internally? Do you buy from outside? Do we have it internally? Where are the capabilities within the business? Then once you have made up your mind that let's buy this from outside the business, then you develop your procurement strategy, which is now your step 3. Once you have developed your procurement strategy, then it informs your 4th step, which is understanding your market analysis. Basically, it's doing your market analysis. What market do you operate in terms of how competitive is it? How many suppliers are there? How many buyers are there? Applying tools like your Porter's 5 forces and stuff like that. Then goes to your step number 5, which is now what kind of documentation are you going to pursue in this procurement process? Is it going to be an RFQ? Is it going to be an RFP, an RFI, as you finalize your specifications? By now, you should be probably aware in terms of when to use an RFQ, when to use an RFP, when to use an expression of interest, when to use an RFI. So that process takes place at stage 5 of the procurement cycle. Once we have finalized that process, you then move to the stage number 6, which is now your supplier selection. How are you going to undertake your supplier selection? You also, at that stage, you finalize the aspects around your supplier selection criteria, your evaluation criteria, how is it going to look like? Because when you put out a tender out there, it means it has to meet those specific requirements in line with your step 1, which is your business needs. Your step 7 really talks about the actual issuing of your invitation to tender or your RFQs. There you'll be clear in terms of how you're going to undertake the negotiations and what kind of a negotiation strategy you are going to pursue in your procurement process. Remember, all this is informed by your step 1, your business needs. Then it informs step number 8, which is now you have received your bids, you have received responses from your RFQ, you now start evaluating. You needed to have agreed as a business how the evaluation is going to take place. I can see a hand. Yes? Tandiwe? Okay, all right, I'll proceed. So your step 8, you're basically dealing now the evaluation of your tender in making a recommendation. If it's in government, you're also looking at what tender processes you are going to follow. If it's in the private sector, every organization has got its own procurement process in terms of evaluation of bids, which then leads to your step 9, which is your contract award to the best supplier who meets your criteria at the best, at the lowest total cost of ownership, which then informs now step 10, we are now receiving your goods because the supplier is delivering, either it's goods or services, deal now with the issues of warehousing and the logistics, the transportation, the receipt and the storage of those goods. Stage number 11, you are now reviewing the performance of the contract. So you can't review if you did not agree the terms and conditions at the beginning. And those terms and conditions must actually articulate your step 1, which is your business needs. Your step number 12 is your supplier relationship management, and also the initiative that we take as a business to develop certain suppliers who have performance gaps. And your step number 13 is your asset management, where we are now disposing some of the goods or unused goods. It could be machinery or even the goods themselves. So these are 13 steps within the procurement cycle. Why is it so important for you to understand this diagram in the context of the 13 steps? It's where is each module within the 13 steps? Because if you understand that, it becomes easier now to apply knowledge as you unpack the concepts in the module, because you understand at which stage of the 13 steps is this module positioned. So we did this within CommerceEdge, and we came up to an agreement that the 13 steps are represented as follows. Your step 1, 2, and 3, they are overlaps. It's not a straight line. This curved line represents that it's not a straight line. They are overlaps. So these steps, they overlap somehow. Your step 1, 2, and 3, they are predominantly covered on business needs, which is your L4M2. So when you are doing L4M2, you immediately understand which steps within the 13 steps am I covering. It doesn't flow like L4, M1, M2, M3, it follows the 13 steps. It doesn't work like that. Now, your L4, M4, which is the one that we are going to be doing this afternoon, is predominantly covered on step 4 and 5. Okay. So now, when you're going through this module, you need to understand which steps am I being, which competencies am I building within the 13 steps. M4, we are actually covering 4 and 5, but there are overlaps. M5, which is your commercial negotiation, we are actually covering step 6, 7, 8, and part of 9. M3, which is your commercial contracting, you only contract after we have done these negotiations and you are sure that they are linked to your business needs. You are going into a contract with a service provider, okay? And that is covered on 9, 10, and 11. But because there's an overlap down your supplier relationship, which is your M6, it basically covers in terms of managing this contract in the form of the KPIs that would have agreed with the service provider as included in your contract document. And your M7 basically deals with your asset management, your whole life costing, where you are now applying what you call the total cost of ownership principles. The question is, where is M1 and where is M8? M1, it's your operational module. It is the one that helps you to build the soft skills to manage the 13 steps in terms of your organizational structure, in terms of your supply or procurement structure, in terms of your communication, in terms of your stakeholder management. These are some of the soft skills that you would need and the infrastructure that you would need to manage the 13 steps of the procurement cycle. Your M8, you see M8 is outside the cycle. What it means now, we are now putting into practice all the 13 elements. Okay, I hope I've clarified this. So this is what we always recommend the students, particularly that started through Compass Edge, that you build your competences from the areas of aspect that you are familiar with. It's a building block. So you start with your M2, you go to M4, you go to M5, you go to M3, you go to M6, you go to M7. You come back to the center to say, how do I make this possible? By the time you do your M1 and your M6, you've got a good understanding of what happens in the 13 steps. So this afternoon, we are only going to be covering the competencies that one must have to execute step 4 and 5. Okay. All right. So that module, M4, has got 4 outcomes. The first outcome is understand options for sourcing of requirements from suppliers. Remember, we are only covering in the main those 2 steps, steps 4 and 5. In there, you need to be able to say which sourcing options are available. And as a procurement person, you need to demonstrate a full understanding to convince your business. Number 2, understand the key processes that can be applied to the analysis of potential external suppliers. How do you analyze the suppliers? Remember, you haven't bought. You are still understanding how to do it. You haven't bought as yet. Number 3, understand compliance issues when sourcing from suppliers. Which are those things that may come back and haunt your decision that you would have taken? What regulations govern your processes? You need to understand that, and obviously understand the ethical and the responsible sourcing. Remember, we are discussing this before you buy. So in understanding this context, this module, understand I'm learning these competencies so that I can make an informed procurement decision. Outcome 1 has got 4 sub-outcomes. The first sub-outcome is identifying the sourcing process in relation to procurement. I've covered that at a high level. Identify the sourcing process in relation to the procurement. Number 2, differentiate between approaches to the sourcing of requirements from suppliers. And number 3, define selection and award criteria that can be applied when sourcing requirements, and then define award criteria that can be commonly applied when sourcing. So this is what we are going to cover in the first part of this session. Before probably I cover that part, I'll try in between to also cover issues around what you need to do to pass the CIPS exams, particularly the multiple choice questions. They are the most complex and difficult form of assessment. The reason being, all answers in many cases are correct. But the question is requiring you to understand and identify the most appropriate question. And it's in certain instances, some of the questions are asked in a negative way, okay? And some of them are asked in a positive way. So don't jump into answering the question without understanding, is this question asked in a negative way or this question is asked in a positive way? The second aspect that you also need to be aware of, hence I spoke to you about the procurement cycle first. It's before you answer the question, ask yourself which competency is being tested here. Before you answer the question, ask yourself and quickly identify which competency is being tested. Because if you don't understand which competency is being tested, the chances are high that you're going to do guesswork. And the guesswork, you can actually fail these exams so dismally. It's very possible to pass these exams, but there is no any other source of passing the exams unless you have read the CIPS module. Okay. Now, we need to, at a high level, in the interest of time, understand what sourcing is and what outsourcing is, make or buy decisions, strategic and tactical sourcing, cost and benefits of outsourcing, outsourcing non-core and core, supplier pre-qualification or your criteria for supplier appraisal, your vendor or supplier performance. I'm not going to go slide by slide. What I'll try and do is cover the aspects at a high level. If you've got a question, then we can discuss those questions. Now, in many cases, when you talk of sourcing, sourcing is understanding your supply market. Sourcing is first understanding your business. Hence, module M2 is critical, business needs. Before you source, you need to understand, does my business need this? Okay. The next item now is, how then do I go about it? You also need to look at aspects around classification of those commodities or goods and services that we are buying. And how am I going to classify them? Are they strategic? Are they tactical? Once we have looked at that, you also look at issues around, do I have suppliers out there? And what is the supply market? How is it structured? How competitive is the supply market? How many possible suppliers are there? Are there any restrictions in the market in which I'm going to be playing in. All those are elements that are considered when we are doing sourcing. So sourcing is different from just procurement or buying. You look at other aspects. Can we buy this or can we develop it internally? When do we need to buy it? Who else do we need to consult with internally? So these decisions, they take place internally as you do your stakeholder engagement. On the other hand, we talk about outsourcing. Outsourcing is now you have made a decision that we need this item, but probably it's not very key to our needs as a business. There are other people out there who are capable of supplying the same need at a cost-effective manner, because to them it is core to their business. So then outsourcing is now saying, getting the same thing that you could have done internally, but from external provider. It usually happens where it's an activity that was done internally, but now you realize that it gives you better economic decisions when somebody supplies it instead of you doing it. I'll use an example. Certain organizations, probably they had canteen services as part of the business. Okay, it means the procurement manager was busy also buying cabbages, was also busy buying your spinach, was also busy buying your broccolis of this world to supply the canteen because it's part of our business. Then you realize the procurement manager is spending most of his or her time pursuing cabbages and spinach, neglecting the procurement of raw materials that are needed in the operations. So because of that, the operations around canteen were then given to a third party who will then be supplying them to us because it is their core business to buy cabbages, to buy broccolis of this world. Because it is their core business, they are also able to get quantity discounts and economies of scale. So that's what outsourcing is. You are trying to maximize your spend. At the same time, we are also trying to free your resources to the core needs of the business. Okay. But for you to get to that stage, there are what you call the make or buy decisions. Make is do internal, and the buy is let the other person supply that item to us. So the make or buy decisions, there's a quadrant that you need to look at. Hopefully we'll cover it here. You first need to, apart from looking at the advantages and the disadvantages, you need to look at, are we capable of doing this requirement internally, which is making? Or we are not capable of doing it internally. I'll share an example with you. I'll put a disclaimer because this is being recorded. But you can verify this on your own as well. If the make or buy decisions are not done properly, and they are done without proper due diligence, in the part of your due diligence, you do your risk assessment, your risk analysis, and we know, we are 100% certain that this is the way we should go. It can actually turn out to be a risky exercise because you can actually sell your business to the market or to the competitor. As I said, I've got a disclaimer on this point, but you can go and verify this on internet. Some years back, Apple, they outsourced one of their needs in the manufacture of a smartphone. And they outsourced that element to Samsung. Those that probably remember Samsung, it was not their core business of cell phones, making cell phones. It was not their core business. And out of that, they actually saw an opportunity today, in the present world, the biggest competition that we see in the telecommunications is between Samsung and Apple. One then have to ask, what happened? Was it because of the make or buy decisions? What is it that Apple could have done differently at the time when they made the make or buy decision? So I'm raising this because as procurement people and also as we prepare for our exams, you need to understand it's not just a thumbs up. It's not just because everyone is doing it. Let's also outsource. Because everyone is doing, let's also insource. We need to have what we call the make or buy decisions. As a business, we come up with a business case that justifies. There are advantages. Definitely there are. As you can see on the screen, which I will not read line by line, there are advantages over each decision that you take, but you need to look at it. How is it going to impact our business? It might not be core, yes, but how is it going to affect the livelihood of the company in the future? So you make those decisions informed, well-informed, and I can assure you it is the role of procurement to do that as part of our understanding the market. Strategic and tactical sourcing cost and benefits of outsourcing. As I said, there are a lot of benefits associated with outsourcing, but there are also costs associated with outsourcing. You can easily sell your business to the competitor. That's the biggest cost. You can sell your rights, sell your business to the competitor. But the benefits, it means you are now focusing on your core business. But I want us to look at the two types of sourcing that are in front of you here. You've got what to call the tactical sourcing and the strategic sourcing. Now, for this type of sourcing to be undertaken, there are quite a number of issues that we need to understand. The first is, what is tactical? Tactical is usually associated with responding to a need instead of driving the need. Tactical usually tends to be reactive in nature, and tactical also usually is short-term. The decisions that we make are short-term. We are not worried about what will be the impact in the future. So it's tactical decisions, and they are usually made by, let's say, your junior member of staff, because the risk is also low. When you go on to the strategic sourcing decisions, on the other hand, these are normally those decisions that are associated with formulating a long-term strategy of the organization that will also impact your procurement policies. You may decide as an organization to say, we want to rationalize our supply base. We have always been buying from 1,000 suppliers, but now we want to buy from 20 suppliers. The question is, how do you reduce suppliers from 1,000 to 20? It means you are only going to be looking at those that you are able to develop long-term relationships with. You then begin to ask in terms, where do I spend most of my money? Usually, you apply your Apc classification. Those suppliers that you spend more, they most likely become your key suppliers, your strategic suppliers. And not only on the spend, but we are also looking at the risk. Remember, one of the objectives of procurement is continuity of supply. So continuity of supply may be impacted by risk, and risk is anything in supply chain. Where supplier they can deliver late, where supplier they can deliver substandard goods, where suppliers they can misunderstand your requirements. Is it a question? Maybe you can mute your mic if you don't mind. Thank you. Okay, thank you. So the difference between tactical and strategic lies in the understanding of your business. There's a tool that we use to determine that. It's called the Clausic matrix. We'll cover it later. Normally, the goods that fall under the low risk, low spend, they are most likely classified under tactical. Okay, so the procurement process will suit that. And the goods that are classified under strategic are usually those that have got high spend and high risk. So for you to determine the high spend and the high risk is not a thumbs up. It means you need to fully understand your procurement process. You need to fully understand your supply market. You need to fully understand your own business. Because it's not the procurement people who say it's high risk. It could be the business that can determine that. So procurement then work hand in glove with the business to differentiate between tactical and strategic. And you use a tool. The tool that you use is called the Clausic matrix. This is a commonly used tool in procurement, which helps in mapping informed procurement strategies. But before you apply any of the procurement strategy in here, what is important is to understand what is the objective per each quadrant. This is your quadrant A. Let's say this is quadrant A, quadrant B, quadrant C, quadrant D. Your quadrant, probably let me go this way. Let me go that way. So from bottom left, clockwise. Let's start with your quadrant that deals with non-critical items. This quadrant tells us that the spend is low. Okay, your profit impact is low, or your spend, let's use the word spend, but there could be people here from the public sector as well. The spend is low relative to other commodities that you buy. And also the supply risk is low. What constitutes supply risk? It's your supply complexities. And what constitutes that is your market structures. Do you operate in a monopoly environment? Do you operate in a monopsony environment? Do you operate in an oligopoly environment? Do you operate in a duopoly environment, in a perfect market? So each of those market structures will present different risks of supply. Do you buy highly regulated goods? Do you import? Do you buy locally? Okay. All those dynamics, they constitute your supply risk, which you then have to do your matrix, and all those goods that fall within the low risk and the low spend, they are called your non-critical items. For example, your stationery. So in here, there are three things that I want you to understand. The first thing is, what is the objective here? The objective here, please give me 1 second. The objective here, please write if you can. The objective on this quadrant is to maximize and reduce complexity. Simplify the process. That's basically what I'm saying. Simplify the process. Because we are buying less expensive and items that are low risk. So simplify the process. Okay. What is your strategy? Your strategy, your sourcing strategy then could be bulk buying here, so that you enjoy your economies of scale. You can even use your framework agreements, and then you use call-off in here. For commodities that fall within the leverage in many, okay, probably your market structure that could be defined here, maybe your market structure here are goods that could be your perfect market, or it could be Yeah, it could be a perfect market, really, here. For goods that are classified under leverage, usually are those goods that have got high spend, but with low supply risk. Low supply risk because there are many suppliers who can supply your requirements. So what is your strategy there? I mean, what is your objective? Before you develop your sourcing strategy, you need to understand what is the objective. What is it that you want to achieve as a procurement person for goods that are classified under leverage? Your objective here is to reduce spend because your spend is high. You are not really worried about risk. Your spend is high. Your objective is to reduce spend. Those that get probably commissions or whatever it is, that's where you can actually achieve your cost savings on these commodities. You'll never achieve more on your cost savings targets on the non-critical or on the bottleneck, but it is on these top ones. Okay, so your objective is to reduce spend. Now, how do you reduce spend? One of the ways of reducing spend is increase competition. Okay, so that's where now on these commodities that are classified under leverage, you can actually start applying your competitive tendering, this here. Okay, and one way of increasing competition is making suppliers compete for your business by going into short-term contracts, always testing the market. Let suppliers compete for your business. So that's your strategy now. I said your objective is reduce spend, so your strategy must deal with that. And what is your strategy? Your strategy now is competitive tendering. You are going to apply competitive tendering, or we are going to go on short-term contracts with suppliers. We constantly go back to the market to test the market because there are many suppliers. The buyer has got power in that environment. Let's move to the right. The strategic items. The strategic items, as the name implies, they are high on spend and they are also high on risk. What it means now, it's very easy. It's very easy to prioritize spend reduction at the expense of risk. So risk can easily escalate whilst you are driving one element of your need, which is reducing spend. So a procurement person at this stage needs to have a balanced approach. The question is, what can go wrong? It means your risk is escalating. So you need to have your risk assessment, your risk identification and risk management strategy here, all right? At the same time, you've got a big chance of achieving your cost savings on the commodities because the spend is high. So what is your objective? There are two objectives that we are trying to achieve at this quadrant. One is to reduce spend, and the two is to also minimize risk. Remember, and three is continuity of supply. The strategy, what strategy are you going to adopt? What sourcing strategy are you going to adopt for this? It could be your partnerships with your suppliers, close partnerships. If you work on close partnerships, you begin now to apply certain principles of your open book costing because the relationship is good. Open book costing helps you to reduce that. Closer supplier relationship helps you to manage and identify risk early in your procurement process. Coming to your bottleneck items. Your bottleneck items, as you can see the positioning, the spend is very little, but the risk is high. Why? Because probably this could be a monopoly environment. There's only one supplier who can supply your needs in your organization. Because you understand the supply market, you know exactly which suppliers fall into this. In many cases, the suppliers that fall into this are your OEMs. your original equipment manufacturers, where you are buying your spares. Now, you can't afford to buy your spares and from another supplier who is not approved by the manufacturer. Then you lose your warranties, your guarantees, and stuff like that. So the risk is high on the bottleneck, but the spend is not much to talk about. It could be a bolt here, bolt and a nut, that can actually cost you R5. But because of aspects around your OEMs, aspects around your guarantees and warranties, you can't have your engineers fabricate a bolt and a nut elsewhere, because that bolt must have a part number. Should you do that and the machine picks up, we have lost the value of the machine, which is 10 million rands, over a nut that was R5, because we did not understand the risk associated with the commodity. So in here, what is your strategy? Your strategy is continuity of supply. Sorry, not strategy, but what is your objective? Is continuity of supply. What is your objective? Is reduce risk. You are not worried about that. So what is your procurement strategy? That you can come up with commodities that fall into this quadrant that will ensure continuity of supply. That's where now you can do your bulk procurement in here. Okay, that's where now you can go into a long-term contract with a service provider of an equipment that then says, guarantee the supply of spares for the life of the contract. I mean, for the life of this piece of machine. Okay, so these are critical strategic decisions that are taken on the basis of understanding what the CROWJIT matrix is. Then it informs how we are going to undertake our procurement. All right, okay, I'm not going to spend a lot of time in some of these aspects. Now, I want to also spend a bit of time in understanding outsourcing. In many instances, people do outsourcing because everyone is outsourcing. We are not outsourced, we are not doing an outsourcing decision because we understand what it means. I remember some few years ago, those that will remember, in South Africa, we had an incident of the outsourcing must fall, hashtag outsourcing must fall. And a colleague of mine actually said to me, help me, I've been asked by my business to provide a justification for insourcing. And I said to that person, before I give you that input, please share with me how the decision of outsourcing was taken in the first place. It's almost 5 years, I'm still waiting. Now, what this tells me is outsourcing, we are just thumb sucking. Now, this quadrant that you see, it then says strategic importance to the business and contribution to operational performance. It's high, it's low, it's that, it's that. So I'll also do the same thing. I'll go clockwise. I'll start with 3, 1, 2, and 4. Commodities or whatever need for, if that falls within this quadrant here, eliminate function or task. It means that kind of an item is not really strategic to our business. And its contribution to our operational performance is really not as great. So can we eliminate that function or task? The answer is yes. If the answer is no, then the question is, where does it fall? Can we move it to 4? Or can we move it to 1? Or can we move it to 2? Okay. Coming now to any item that fall under the strategic alliance. It's a decision that we are taking. We are saying this item is so strategic to the organization. Its strategic importance is very high, but its contribution to our performance is not as high. Can we then partner with another person. It might not necessarily be an outsourcing decision, but probably we are just partnering with another person who can then help us to undertake this through what we call a strategic alliance for that particular need. Because it is so strategic to the business, we cannot outsource it because there's a degree of control that we still need for that particular item. For any items that probably fall under what we call quadrant number 2, where the operational contribution to operational performance is very high and also is so strategic to the business, is do in-house, retain in-house. So it means we also need to check that, do we have the right competencies, resources to undertake that, because it's so important to the business. What is it that then we can outsource? Is those items that we feel if the contribution comes from outside is high, contribution to operational performance is high, but it's not strategic to our business. Can we outsource it? Yes. Like coming back to the issue of the canteen. Is the canteen contribution to operational performance very high? Yes, it is, because if employees are hungry, that may have a direct impact on the performance of the organization. If we don't have a canteen and people now have to drive out to buy food, they come back 2 hours late, it means that is going to affect the operational performance. So as a result, we want employees to have lunch inside, but at the same time, our business is not about providing lunch. So let's have somebody who can provide that, because that has got a direct impact to the performance of the business. So then we are going to outsource it. So in a nutshell, when we are dealing with the issues of outsourcing, non-core or core, you expose them to some of these elements. It can work that it is a non-core, but it's so critical to the business. So instead of outsourcing, we are going to go for a strategic alliance because it's so important to our business. So we need to understand outsourcing in that context. All right. Pre-qualification usually happens before you buy. Pre-qualification usually happens before you buy. Now, you need to understand, probably we'll cover this later on. By pre-qualification, you are saying, do the supplier meet are the suppliers capable of meeting our needs as part of your supplier appraisal? Are the suppliers or this supplier that we want to do business with, is the supplier capable of meeting our needs? So there are many ways that you can apply that. You can even check in terms of their profitability, because if they are not making money, how are they going to supply our needs? If their productivity is very low, how are they going to meet our requirements? If their quality is questionable, and on the other hand, we are dealing with the 5 rights of procurement, but one of the 5 rights is questionable, which is quality. Should we continue doing business with this supplier? The new product development, how good is this supplier in terms of innovation? How innovative are they? Are they bringing in new products onto the market? And also in issues around how good are they in managing their own cost? How good are they? What is their capability of delivering on time? Technology, which is now innovation, are they improving their own systems in the manner that they can also pass those benefits to us? What is their management capability like? If they've got high staff turnover, then it creates problems for us when we are actually profiling that supplier. Okay, so you do all these elements before you place an order as part of your pre-qualification. depending on your business, you set probably if a supplier scores 70% on a score, on a weighted score average, then you say, no, this supplier is a high risk to us because they don't meet our requirements. So we are not going to qualify them as part of our shortlisted suppliers. Certain organizations, they work with what we call pre-approved, the vendor list and stuff like that. And all those vendors, they go through this process here. So it's a very critical aspect. We often talk about supplier performance. Supplier performance can directly impact our business, can directly impact the profitability of the business or the sustainability of the business. It can directly affect, even if it's in public sector, the your service delivery guidelines. So as part of the supplier or vendor performance management, we first need to identify what we call the KPIs. Which are these elements that we want the supplier to meet? In a simplified version, your KPIs are actually your 5 rights, which is your right quality. The supplier is capable of supplying the right quality at the right time, at the right place, deliver on time, deliver at the right time, delivery, and the right quantity. So those 5 rights of procurement, they can actually formulate what we call your key performance indicators for your suppliers. You can actually use them as part of your supplier selection. But if you want to sophisticate your supplier selection, then you are talking about issues around your cater-tenses, your face-to-face, you apply your financial aspects, which you will cover later on. This, I'm not going to spend a lot of time. I think I've covered this in terms of if you don't do your outsourcing right, there are a lot of risks associated with it. If you do outsourcing as a copy and paste because everyone is doing it, these are some of the risks that you can actually be faced with. Your loss of control of activities, your high cost of services. So basically to overcome these risks, when you're applying an outsourcing, you also need to accept those suppliers the same way as which you apply when you are identifying your suppliers. The same KPIs that you use when you are appraising your suppliers is the same requirements that you must apply when you are engaging with an outsourced service provider, because they are your supplier. In a sense, they are your supplier. So you need to cover these elements. What drives outsourcing? I think I've covered this. So outsourcing is not an afterthought. Outsourcing, you need to align it to the business needs. Do we want to maintain the quality, the same quality standard, or even do it better? Yes. Can an outsourced, because it's part of their core business, can they do it better? Yes, then you tick. Can it help us to reduce cost? Because the procurement manager, instead of spending time buying cabbages, this procurement manager is spending time buying raw materials that are needed in the business. In the process of doing that, we then enjoy the economies of scale from the outsourced, which then reduces our cost. But at the same time, because the procurement manager is now focusing on the core business, that becomes an advantage to us. The financial drivers as well, our resources are used for the main core of the business. And the relationship drivers, an outsourced relationship, yes, it still has to be managed, but we are actually managing what we are here for. And we can deploy the right human resources to the right functions of the business. One element that also need to be aware of, it's usually applicable. Now we're talking of the CHUP. Now when we are outsourcing your requirements, the first thing that you need to look at is the protection of your employees. So what that means is, let's say people were working in the canteen and I was the canteen manager, and my role is now moved to this outsource arrangement. It means I move across with my full benefits. If I had spent 10 years in this organization, when this role has been moved over to this outsource, it means I take those 10 years across. That's what it means by protection of employee rights. In the event that this new source outsource begin to retrench its employees, okay, I'm considered as having worked for 10 years, not for 1 year, because I move over those other years. Okay, so that's what we need to look for. And colleagues, when you are part of the negotiations of the outsourcing, raise these issues with your unions. It could be representatives from the unions as well during the outsourcing decision, because it has got serious impact to employees. So that's what this directive is about. It protects the employees. So companies cannot just outsource because they are driving profitability. They outsource because they also need to protect their employees. Outcome number 1.2, differentiate between approaches to the sourcing of requirements from suppliers. Now, we've got different sourcing approaches. Now, these sourcing approaches align them to the Clausic matrix that I spoke about earlier on. When do we use single source? When do you use dual source? When do you use multiple sourcing? The idea is it going to help us to reduce cost? Is it going to help us to reduce supply risk? So it's not a thumb suck. A procurement person must understand, when do I use single source? It means there are many suppliers who could have supplied us, but we have made a conscious decision as a business to only buy from one supplier, a single source. There's also called sole sourcing. Sole sourcing, there's only one supplier in the market. So we just have to deal with that one supplier. Dual sourcing, on the other hand, dual sourcing, there is splitting our order between two suppliers. Let's say we want to minimize risk, supply risk. We have done our due diligence and we want continuity of supply. We realize that if we place all our orders with one supplier, there's a chance that they can actually not deliver. So let's break our order into two, okay? We give, let's say, 40% to one supplier and another 60% to another supplier. So we have split your orders. It's a dual sourcing arrangement. A multiple sourcing, you make an informed decision as a business to say, we are going to buy from multiple suppliers. The reason could be we want to increase competition. And that can happen probably on your leverage commodities, because we are not intending to creating long-term relationships. Okay. The use of tendering. When do we use tendering? We've got three types of tenders. We've got what we call the open tender, the restricted, and the negotiated approaches. Now, the open tender, basically what we are saying is you advertise your tender either through the newspapers, where whoever feels they can meet your requirements, they can submit their bid. But this is what you need to do. All suppliers who submit their bids and meet your criteria, you've got a right. I mean, we are obligated to evaluate the tenders. That's an open tender. Could be 1,000 suppliers who submit. you are obligated to evaluate their tenders. On the restricted tender, on the other hand, the restricted, by implication, it means it's only to a few pre-qualified. Now, there are two ways of achieving this. The first one, you might already have a list of pre-qualified suppliers. Could be 5. It means when you want to buy, you only send your request, RFQ or your tender documents to these classified suppliers. Could be 5, could be 10, whatever, depending on your policies. Another way of looking at it is you don't have a pre-qualified list in the first instance. So what you can do, you can actually exercise what you call an expression of interest. You send out an expression of interest to the market. And out of the expression of interest, you pre-qualify. It is only those that would have pre-qualified that you will send the tender documents to. So it becomes a restricted. It's a two-way restricted, only because they've met your pre-qualifications. The negotiated approach, on the other hand, you actually stipulate in your tender that you reserve the right to further negotiate with the supplier or the winning supplier or whatever it is. The problem, that is, in my view, this is my personal opinion, the problem with the negotiated tender is that the suppliers have got a tendency of inflating their cost to provide a provision for negotiations. But it's another way of exercising an approach for procurement of goods. There's also what you call the direct negotiations with suppliers. Direct negotiations with suppliers, you decide, go up front, you have identified the supplier that you want to do business with, then you come, let's talk. In there, you then have to have a clearly defined strategy, how we are going, what is it that you want to achieve in the negotiations? Are you going to go for a competitive approach or you're going to go for a collaborative approach? But it's direct, it's going to a pre-identified service provider. The other element is the intra-company. There's a lot of, there's a cloud on this kind of approach. Intra is where a group of companies, they decide that they want to keep the money within the business. So what they do, they can actually buy from each other. Okay, that's the intra company. They buy from within themselves. The money circulates from within themselves. They also set up pricing regimes within themselves under what you call the transfer pricing arrangements. This can work, but it also has got a potential of an ethical practice. It also has a potential of eliminating competition at the expense of the consumer. But it's a way of doing business. So organizations, some, they actually have what you call, if organizations, they are pursuing the intra-company trading, they also need to look at their procurement structure. Is it going to be centralized? Is it going to be decentralized? Are we going to have a head office that does the procurement on behalf of other divisions? Or we are going to have each division responsible for its own needs? Certain organizations, they are part of the group of companies which are not related. But certain organizations, they are part of a group of companies that are related, meaning they buy similar. Think of telecommunications. You can have different divisions in each country, but what they buy is more or less the same. So they can easily have a centralized procurement structure. But you can also have certain organizations that are a group of companies that have got businesses that are not related to each other. They can decide to have a devolved structure within their procurement. Another sourcing element that you can look at is your implications of, it's your international sourcing. By implication, international sourcing is buying from a supplier who is outside your country of residence. Now you need to start looking at aspects around the pricing, aspects around the exchange rates. Which currency are you going to use? And how is it going to affect your exchange rates? You also need to look at aspects around your different time zones. You also need to look at aspects around your lead times. They are usually longer because of logistical complexities. You also need to look at issues around customs, clearing, delays at the customs. You also need to look at around what mode of transport are you going to use? Are you going to use your air? Are you going to use sea? Are you going to use road? Are you going to use rail or pipe or whatever it is? Or you're going to use a combination of modes of transport. You also need to look at issues around contracting. Who is responsible should anything happen? And what kind of documentation are you going to use? We'll cover them later on. So these are some of the elements that you need to look at. Even the issues around language are very critical when you are doing your international sourcing. Or issues around return. You have bought this stuff, but you realize that you don't need it or it doesn't meet your requirements. What do you do? How do you return stuff that you imported? How easy is that? So these are some of the decisions that are looked at from a procurement perspective when we are doing your procurement. All right, I've covered these items. That's what I was trying to do. There is no best way of procurement, but your organization really can actually direct you on how to do some of these elements. That's what I was covering. Now, let's look at item 1.3, define selection criteria that is commonly applied when sourcing requirements. Every organization has got its own way of selecting suppliers. But there's something very common to all the organizations, be it in the public sector or in the private sector. What is common amongst all of them is the issues around continuity of supply, is the issues around what can go wrong. In other words, the risk associated with supplies. So the risk can lie within the business, or the risk can lie with the supplier. Okay. But for us to be able to do that, it is important that now we do what we call the due diligence checks. Okay. So in this outcome here, sub-outcome, you're basically looking at your financials as a way of understanding the supplier's capability of meeting our needs. The importance of supplier financial stability and the due diligence checks. I'll cover this at a high level. In many cases, procurement people, we have relegated the financials to finance people, which is fine. But I can tell you, this can help you to pass your exam at the same time, help you to do your job. Use your cross-functional teams. Have a finance person in your cross-functional team who will help you to analyze the balance sheet or whatever it is. Now, in many cases, when you look at the balance sheet of a supplier, balance sheet then can be split into your fixed assets, your current assets, and your current liabilities. when you look at your current, let's focus on the current assets and current liabilities. When you look at your current assets, it's what you have, okay? It's what you have, which could be cash in the bank. It could be your debtors, the people that owe you money. It could be your inventory. That's what is indicated in the balance sheet under current assets. You've got cash in bank, you've got your debtors, and then you have your inventory. Cash is king. So when you analyze that balance sheet, if you see that the cash at the bank is less than the money that we are owed, and is less than the value of the stock that we keep in our warehouse, on the face of it, that can give you an indication that this supplier might potentially go into cash flow problems. It doesn't mean that they are broke, but it means they may have cash flow problems because they may not be able to liquidate their stock overnight into cash, and they may also not be able to collect all their money within a given period of time. That can then ensure that they are not able to meet their financial commitments. So then they have a cash flow problem. So as a procurement person, when you are doing due diligence, you look at the balance sheet, you say, this is creating a problem to us. It's the financial stability of it. They've got a strong balance sheet, but we are zeroing in on the current assets: cash, debtors, and inventory. Okay. So for us to do that, to do those ratios, then you do what you call the ratio analysis to determine that financial risk or financial stability, and the due diligence check in terms of why is this company, you can do those credit checks as well as stuff like that. Now, if you look at now on the current liabilities, this is what we owe other people. Current liabilities could be your creditors, the people that you owe money, all right? And it could be the bank where you've got high interest rates that you are paying because you took a loan. Now, that is actually seen when we are looking at the gearing. The gearing where the organization is running its operations through borrowing. Because our cash flow is not good. So we run our business through borrowing. And when you borrow money from the bank is happy because that's how they make money. Then they charge us interest. So in the balance sheet, you see those interests. And if the interests are high and our creditors are high against a very low cash in the bank, that organization is potentially in trouble. Now, placing an order with that kind of a supplier is potentially creating a problem to your operations because the supplier is financing their business through you. How are they recovering their interest that they are servicing the loan with? How are they recovering it? They may recover it through you. They're passing some of these costs to you and you are paying for them. Okay. How are they recovering? I mean, how can they ensure that there is continuity of supply? Because if they can't pay their own suppliers, they can't pay their own employees, there is a danger that they can not supply your requirements. And we have just placed an order with them. So these financial ratios will then help us to determine if the supplier is capable or not. The current ratio is where the current ratio is you are determining the supplier's capability, probably for a period of 12 months, their capability to meet their financial commitments, maybe for a period of 12 months. That also includes, it's now, to get that, it's your current assets divided by current liabilities. Your current assets, as I indicated, they include issues like your stock or your inventory. They include issues like your data and your cash at bank. You divide that by your current liabilities. Now, the interpretation is that if the outcome is less than 1, there is a potential that the supplier might have financial problems. So I'm saying less than 1 as an example. Let's say if the current assets are 10 Rand and the current liabilities are 15 Rand, you divide that, you get 0.5. So it means this supplier is below 1. So the interpretation is this supplier may have financial problems. I'm using the word may because there are assumptions that are put in there. But in the event that this supplier's, the outcome is 1 or more, it means the supplier, on the face of it, they are able to meet their financial obligations. That's your current ratio. Now, if you look at your liquidity ratio on the other end, the liquidity ratio is looking at the supplier's capability in the short term. You can even put that to a 30-day cycle. Is the supplier able to meet their financial obligation in the short term? Now, because we are talking about the short term, now you remove inventory in the current assets. Because inventory, depending on the business, some of the inventory can take almost 90 days to convert inventory into cash. You produce, you sell, the supplier pays you. So that could be 90 days before you get cash from that inventory. And some of the data can actually be bad dates. So you remove inventory from your current assets. You divide that. If the answer you get is 1 or more, it means the supplier is in a financial position, is stable. You can actually trust this supplier. But if the supplier, if the outcome is less than 1, it means the supplier is really has got a serious problem, financial problems. Same applies with the gearing effect. Is the supplier is running its business based on borrowing, and they run a high risk, because what if they fail to service their interest, their borrowing? That's where now we learn about some of these issues of hostile takeover, because the company was run on borrowing and then they faced financial problems. However, there are also limitations of these financial ratios that you must be aware. These financial ratios, they are historic, okay? They may not reflect what is there on the ground. So because they are historic, they may not reflect what is there on the ground. It also becomes a risky to rely on them. So when you're looking at these financial ratios, you need to look at them probably with some other information. That's where now your credit checks comes in. That's where now your supplier visitations come in. That's where now you also look at your early warning signs, like if there's a high staff turnover. Those are some of the things that, but you cannot 100% rely on the financials only, because sometimes the books are cooked. It's financial messaging, but it is a good measure of checking the supplier's credibility. And some of the measures that you can also look at are the issues around quality. Does the supplier, maybe for instance, have an ISO standard? Your ISO, you can actually stipulate in your requirement that you need a supplier that has got an ISO certificate, ISO 9000, QMS. If you're looking at issues around environmental sustainability, does this supplier have your environmental management system ISO 14000, technical capabilities, what is their machinery like, equipment like, how recent, is it old, is it new, have you been to their plant? The systems, what systems are they using? Are they up to date with their systems? Have they automated some of their processes? These elements, they give you a measure that this is a supplier that you can work with. Their labor standards, okay. Are they practicing modern slavery? Are they paying suppliers? Are they paying workers a living wage? These are some of the issues that you cannot get by reading newspapers. You may need to visit some of these suppliers. You may need some documentation, evidence document from the supplier that justify that they practice labor standards. Workers, they get protective clothing if they need to be getting protective clothing. Workers are subjected to medical tests if they need to be. And then the financial capabilities, we have looked at that. Okay. So this is now, let's look at when now we are making that defining an award criteria. It is very common that when we are deciding on the supplier, we decide on the price. It's more than that. We decide on what you call the total cost of ownership. What will be the total cost of this decision as opposed to what is the price? So by defining your award criteria, you can actually use the, you see, it's not a hide and seek game. You actually tell the supplier that this is what we are going to do in terms of evaluation. If you are going to put scores, if you put a score on price, you put a score on technical merit, you put a score on added solutions, systems and resources, so be it. If you put a score on the technical capability, so be it, but let the supplier be aware that the evaluation is going to be based on the following aspects. The total life cycle, if you still remember your total cost of ownership, we're dealing with the issues around your initial acquisition. You look at the cost around operational cost that will include commissioning, training of your technicians and stuff like that, and also the disposal, where the costs around decommissioning take place. So when you're doing an evaluation, you can actually say, we are going to look at end-to-end process. The supplier must demonstrate that they are capable of meeting our needs as a business. You can also apply issues around your corporate social responsibility, where you balance your price, you balance your people, environment, and profit, people, and the environment. So those aspects must also be made clear to the supplier when they are doing an evaluation. Now, I want us to have a short break, but before we do that, I want us to try and answer this question. Unmute wherever you are. Unmute wherever you are. And tell me the answer to this question. This is a typical question that you can find in the exam. It says, which of the following is the most useful to assess a supplier's liquidity? The first thing before you answer the question, I want you to identify which competency is being tested. You can unmute, Cheryl.
Is it A?
No, no, it means we're not listening. It means you're not listening. My question was, before we answer the question, we first need to identify the competency. Which competency is being tested?
Financial status. The financial status of a supplier.
It's the financial status. So we are actually testing the liquidity ratios. Liquidity ratios. That's what is being tested in this question, your financial stability of the supplier. Now, having said that, what do you think is the answer? What do you think is the answer?
Current ratio.
It's current ratio.
The answer.
Yeah.
So we all agree?
Yes, current ratio.
Yes, current ratio.
No, that's fine. Hi, colleagues. Hope we are all back. Can we proceed with our session? I must say, this is just at a high level. In the interest of time, and the assumption as well is that we have interacted with the content, the CIPS module, and we are ready for your exams. And also, for you to be successful in your exams are going to come 100% from your module. So you must be able to read in between the lines. And when you read when you do your studies, please also pay attention to terms that are usually put on the side, like your A to Z or whatever it is. It gives you a context in terms of definitions, of key definitions that you need to be aware of. Spend time to read those. Don't browse on this study guide. Read, please. Okay. Now let's look at outcome 2. Outcome 2 is understand the key processes that can be applied to the analysis of potential external suppliers. Remember where this module sits within the 13 steps? You haven't bought yet. We are preparing yourself to understand the market. So this outcome, we are going to look at 4 sub-outcomes. Analyze commonly used resources of information. Commonly used sources of information on market data that can impact on the sourcing of requirements. 2, identify the key processes used to obtaining quotations and tenders. 4, identify the criteria that can be commonly applied to the assessment of quotations or tenders. And 4, analyze how electronic systems can be used to help the sourcing of requirements. The outcome, sub-outcome 1, we talk of various sources of information, compiling data on expenditures on suppliers. Now, earlier on, I made reference to the Clausic matrix, if you still remember. Within the Clausic matrix, particularly when you're applying your strategic sourcing principles within your procurement, there are few tools that you need to be aware of and you're able to use them that help you to understand your spend patterns. And one of those tools is called the Apc Classification. The other name to it is the Pareto, and other authors, they use what we call the 20/80 rule. What basically that tool helps you with is to understand your spending pattern. The spending pattern then will indicate that 20% of your commodities or of your goods and services that you buy, they carry 80% of your expenditure. or 20% of the goods and services that are bought in your organization, they constitute 80% of your spend. So common sense then will tell you that you need to spend more time on the few commodities or goods. I mean, I'm trying to shy away from using the word commodity here, but it's refusing to come away. Okay, the proper term is goods and services. 20%, let's say you've got a list of 10 goods and services that you buy, which may include your stationery, your services, or whatever, and there are 10 of them. Okay. Think of your grocery that you buy, your monthly grocery, your household monthly grocery. 10 items, maybe, and you spend 100 rands from those 10 items. If probably 80 rands out of your 100 is only spent on 2 items, that constitute your A category items. So they are few in terms of quantity, but they take the bulk of your spend. So the Apc classification helps you to understand your spend that way. It can also mean, apart from goods and services, it can also be classified around suppliers. The bulk of your spend is only spent with 2 suppliers, and the rest of them, they share the difference. So if really I had the time to demonstrate to you how to plot that diagram, I could have easily done that, so that then at every stage you are able to also say, how do I manage this spend? But in this particular moment, you just need to understand that the Apc classification is a tool that you can use to understand your spend by product, by service, or by a supplier. Another tool that you can also use to understand the market data and the impact that we have on your procurement process is the use of indices. Now, the indices, they indicate in terms of, they help you in terms of understanding spend. Okay, you talk of issues like your GDP, your consumer price index, your procurement index. So all these indices, they help you to understand your market, your economic market. Either it's a market that has got high inflation or it's a market that has got low inflation. The spending patterns, they will also help you. And they can even help you in terms of agreeing with the supplier in terms of payment terms. Remember, it's one of the responsibilities of procurement to manage cash flows. And you manage cash flows in a business through agreeing or negotiating favorable payment terms. And those payment terms must be in sync with what the salespeople are doing on the other end of the business. If, for example, you pay all your suppliers on COD. For example, you pay all your suppliers on COD. But on the other hand, your salespeople, they are actually not being paid by their customers. They're actually being paid after 30 days. I'm telling you, before you know it, that business will be having serious cash flow problems. So the indices help you to make some of these decisions. Okay, because suppliers, they will push, and they will push big time. You also look at issues around secondary data. Now, we talk of primary and secondary data in research. Primary data is the data that you normally collect for that specific purpose. But secondary data is the data that has already been collected for other purposes. Now, that data can actually come in very handy in helping you understand your supply market. For instance, if you attend conferences as a procurement person, you've got information that probably is given to you by another person without paying for it. Or you can even belong to professional bodies like CIPS. Okay, take time to go onto the CIPS website. There's a lot of secondary data that can help you to understand the market dynamics. You can even probably belong to other forums, or you can go onto the website, suppliers website, or going through financial journals. All this information, it helps you to get data which was not meant for you, but is the data which can actually help you to make an informed decision. Read newspapers, listen to the news. I would like to make an informed assumption here that we all know what STIPO stands for. How issues around the social aspects impact on suppliers, issues around COVID, impact on supply chains, issues around the vaccinations, impact supply chains, issues around this. Basically, those are social issues, issues around technology. Now we are talking about robotics and stuff like that. How will this affect? It's data that is out there. You talk about issues around blockchains. How will this impact supply chains? This is data which is available, but it is the data that we use to make informed decisions. The political climate in your own environment. Is it favorable for business? Is it not favorable for business? How is it going to impact the politicians when they make decisions? How is it going to affect your procurement processes? Okay, right now we are talking about the regulations. Okay, COVID-19 regulations. How are they going to impact your processes? So that's data that is available, which as procurement people, we need to use to make informed decisions. There is some noise. If somebody can mute, that will help us, please. Thank you. We also look at commodity pricing. That's why I was trying to shy away. Can you please mute yourself so that you can benefit? Please just check your mic and ensure that your mic is muted. This is for the benefit of others as well. You may not be aware that your mic is unmuted. Just check. Commodity pricing, that's why I was trying to shy away earlier on to use the word commodity in a very loose way. Because in this context, commodities are those goods that are normally linked to their primary sources. Like you talk of your minerals, you talk of your oil, you talk of energy, metals and stuff like that, agricultural produce. These are those goods that are generally linked to their primary sources. As a procurement person, you need either you're buying those in your organization or you don't necessarily buy them, but they affect your business anyhow. For example, the price of oil. If the price of oil, we all know, it fluctuates on a regular basis. And tie that together with your exchange rate. It means this commodity pricing, they fluctuate on a regular basis. So as a procurement person, because of those dynamics, what kind of procurement process are you going to undertake? Are you going to do what you call hedging? Are you going to do what you call futures contracts? How are you going to do it? So those are the elements that we are saying by understanding the nature of goods and services that you buy. Sometimes you don't necessarily buy them, but they also affect your business. They also affect in terms of supply and demand. They also affect in terms of pricing, global pricing. So because of that, a procurement person must be aware of the commodity pricing. They fluctuate on a regular basis, just like the exchange rate does. And also another element that is important when we are looking at market data is analyzing potential suppliers. Now, analyzing potential suppliers also entails understanding the market structures. I alluded to market structures earlier on, but when we are talking of market structures, we are saying, how is the market in which I operate structured? Okay. How many suppliers are there? How many buyers are there? Are there any regulations? If they are, what kind of regulations? What is it that I need to do within that regulated environment? So you typically have such market structures as your oligopoly market. Oligopoly market, just to recap, is a market which is dominated by a few suppliers who sell similar products. Okay. A typical example of an oligopoly market would be the fuel industry. In the context of South Africa, maybe we've got 5 or 6 key players, your likes of your Total, your Engen, your Sasol, your BP, and stuff like that, who operate in this oligopoly market where the pricing of fuel, depending on where you are, if you are inland or you are coastal, the price of fuel is more or less the same. It doesn't matter where you're buying it from. And the quality of the fuel to an ordinary person like me is the same. It doesn't matter where you're buying it from. Then the question is, why then would you buy from this service instead of that other one? It could be other elements like the service that you get. You get there, they clean your windscreen, they check your tires, they greet you, they say all sorts of nice things. Then you're obliged to go to them. Or the trend that we see, the global trend that we see, there are loyalty points. Because you want to get loyalty points and you are obliged to go to that other company instead of that other one. Or because of synergies, strategic synergies. If you go to Engen, maybe you also want to buy your eats from Woolworth. Usually they go together. Or you want to buy from Pick and Pay, then you go to BP. So these are some of the synergies. So it's important when you analyze the market, what market structure am I operating in? I've just given you the oligopoly, and then also look at the monopsony. Monopsony is the opposite of monopoly. Monopoly is a market which is dominated by a single supplier. That's monopoly. But monopsony, on the other hand, is a market which is dominated by a single buyer. Let's say in government. Government is the single largest buyer in many countries. So if the government, they consolidate their procurement, they can actually dictate the pricing on the market on certain goods and services that they buy. An example in South Africa, Eskom is one of the biggest consumers of coal. So they may be in a monopsony environment where they are the biggest buyers of coal in the generation of electricity. So you need to understand, if I'm a buyer at Eskom, then the question is, why am I paying higher prices? Because I can dictate the price. I'm not saying that's what it is. Please put a disclaimer here. Then you also look at your we looked at your monopoly, look at your monopsony, look at the oligopoly, and also there's a perfect market. It depends on how then we are going to, it's a monopolistic market. That's the word that I'm looking for. A monopolistic market is a market that is dominated by many suppliers, but these suppliers, they sell what you call differentiated goods. They differentiate them by brand name and stuff like that. A classic example, when you're buying computers for your business, for your organization, or cell phones for your organization, the question is, do you buy a brand or you buy a phone? Which now is an element of specifications. So when you're analyzing your potential suppliers, you also analyze them in the context of your specifications. Because the way you develop your specifications can actually create market structures for your own environment. You also, as you analyze the potential suppliers, you also look at them in the context of Porter's 5 forces. I hope you all understand Porter's 5 forces, which is who has got power in the market. Is it the supplier? Is it the buyer? How easy is it for other suppliers to enter the market or to exit the market? The financial reports and supplier financial stability, we have looked at supplier financial stability, but one of the key elements that you also need to look at here is the role of the credit rating agencies. We're talking about financial reports, the role of the credit rating agencies. Just like one who want to buy a car or a house, you go to the bank, they want to check your credibility. Okay, it's exactly the same like you would do with your suppliers. You cannot just go blindly to place an order with a supplier if you're a procurement person. Understand how credible is this supplier? What are other people saying about this supplier? Okay. All right. So there are agencies you can use third party to help you with that if you have access to that information. Okay. Let's move. I've been covering some of this. Probably let me take a bit of time here. Typical documents that you usually use when we are pursuing your procurement process is an RFI. Usually you use an RFI if you are not 100% certain. You can use an RFI as part of building your specifications. Same applies with your RFP. The big question is, how do you deal with this where there is collusion? As a procurement person, then you need to put some guidelines. If you say a supplier participates in the RFI or RFP, can they also participate in the RFQ? It's your decision to make. But as part of your procurement process and analyzing risk in the procurement with issues around ethics and ethical practice, you need to look into that as well. And then your request for quotation is a document that you usually send out that generate your contract discussions. I'm not going to go into the legal side of contracting with RFQs and tenders. I think it's outside the scope of this module here, which is fine. Okay. Those who then decide to buy goods using tender process, there is a standard tendering process that also needs to be followed. Either you have it in your organization or you follow the prescribed one by CIPS. The whole idea of a tendering process is to create competition and create a plain field of play. In other words, no one supplier must be given advantage over the other. Hence, you advertise in the media, you advertise that through the pre-qualified suppliers, they all receive the same in the request for tender. The adjudication is either you invite them during the adjudication or you do it on your own, but there is always an element of briefing the suppliers and then the debriefing of the suppliers. The debriefing really happens after you have done your evaluation. you are informing the unsuccessful bidders. It helps you to help them build their processes so that they know where they fell short. But it also helps you to gain their confidence because you are transparent. Okay. The question, when do we do debriefing? Do you do debriefing after awarding a contract? Yes, it's good practice. Award a contract and then you debrief. Otherwise, if you debrief, you notify these other suppliers that they were not successful, and the one that you earmarked to get the business, they don't take your contract. We are forced to go back to these other ones. It can actually become messy. So you need to find ways, and those are some of the issues around tender process. Understand the legality around the tender process as opposed to normal RFQ procurement. Now, there are timescales that needs to be observed, and also the suppliers, they can even take you to court when you're buying stuff by tender. And in the event that we are going to request for a post-tender negotiation, this must also have been included in your bid documents upfront so that the suppliers are aware of how we are going to handle and adjudicate the tender. Remember, we spoke about post-tender negotiations. So you need to have advised the suppliers upfront that they are the one that is most likely going to win is still going to be subjected to further negotiations. The whole idea, as I indicated, is the issues around governance, so that the suppliers, they trust your system and is seen to be a legal process. And also the issues around transparency and promoting competition. Those that understand in the South African context in public sector, this is actually institutionalized. It's part of the institution of the country that procurement must be operated, done in a certain way. So even private sector organizations, they adopt that kind of approach because it improves the integrity of your decision-making. Okay. Now, once you have received, let's say you want now to do an appraisal of your suppliers, you can see here, appraisal, you have a criteria. It's unlimited, it depends on what you want. So the decision is not only made on the basis of price. The decision is also made in terms of the whole life cost, in terms of quality, in terms of the capacity, in terms of your CSR policy, and your EDI, which is your enterprise data interchange and how you manage that, and many other aspects. So you define this upfront, okay? Then from there, the total cost of ownership is the one that is going to be determined. You put some scores here. You use your weighted average. At the end of the day, the supplier who gives you the best combination most likely is the one that will get the job, not necessarily the cheapest one, nor the most expensive, but the one that gives you a combination of these other aspects. This one can look like it's the lowest, but they may not have capacity. Or it may look like the lowest, but look at their quality record, poor results. They don't have an ISO standard. So you pay for it. Look at their corporate social responsibility. They don't have it. Now you award these guys a contract. The next morning we are reading from the newspaper about this supplier being closed down because of social responsibility issues. The ink has not even dried up in the contract and the supplier cannot supply. So what we are saying, when you are assessing the suppliers, you then have to do an approach that will encompass so that the decision is all-encompassing. Okay, so this is a worked out example. I'll not spend time on this one. This is a worked out example that indicates what I was talking about. That at the end of the day, when you make a decision, you realize that you are now making a complete decision which is based on these factors. Okay, let's move here in the interest of time. I'm also mindful of, I've looked at gearing, okay, I've looked at limitations of that. Now let's look at some of the electronic systems that are available in the procurement side. But the easier way of looking at that is when we are looking at the procurement cycle. This is a typical procurement cycle, procure to pay, right from generating an order up to the time the payment has been facilitated. Now, if I was to ask you to unmute, which I'm not going to do because then it will cause chaos. Now, within this cycle, where can you use technology? Certain organizations, you'll find probably, depending on the level of maturity, our specifications have been computerized. Either we use a part number or we use whatever. If we punch that part number, it gives you the description. So you're actually using technology to manipulate your procurement process. Okay. And other people, they actually use e-tendering process portals. Okay. So we have eliminated manual work. It is now technology that comes in, even up to the evaluation of the tenders. The e-tender portal is doing all that. Okay. Contracting, e-contracting happens, so you can see the side on the right is about sourcing, and this one is about procurement. This is administrative, and this is going out to the market to understand the supply market. You can actually use internet to source suppliers. You can actually use internet even to do your market research. You don't have to travel. Now you use Zoom, you need all sorts of stuff, meetings and stuff like that. So this can happen at the part of this. On the administrative side of the procurement, we have issued a purchase order, you have issued a contract at this stage. Now, the payment can actually happen online. The EFTs now, in the past, actually we had a checkbook, which was signed by 3 or 4 people in the organization, and that check is posted. You have a messenger who goes to the bank to deposit the check. The cycle time would be almost 3 weeks before that check clears in the bank. But today, what do we use? We use EFTs. Okay, so we have shortened the cycle as a result of technology. Even ordering, we do e-ordering. Right now, we've got your e-deliveries and stuff like that because of COVID. Even this program that we are doing is technology. Okay. Now, we also have, some of you maybe they are aware of the 3D delivery, even the payments, that's what I was talking about. So we have used now, we've got technology now that you can use. E-catalogs are here. E-catalogs are here. Okay. You access a catalog on the system, either use your, what you call the reverse logistics, all these other elements, we can actually use them. Or some people, they use auctions, e-auctions, where suppliers, they bid, or use reverse auctions, where the suppliers actually bid for your business. Online, that's what technology has done. It has actually revolutionized the way procurement is done. Okay, now let's look at this question here. Hope you'll still remember. You can unmute. You can unmute. Let's quickly look at this question. Which of the following is the most effective measure for a procurement manager to identify potential risks in relation to a supplier's exposure to increases in interest rates. What is being tested here? What is being tested here? Which of the following is the most effective measure for a procurement manager to identify potential risks in relation to a supplier's exposure to increases in interest rates?
B.
Yeah, but what competence is being measured here? Remember what I said earlier on, before you answer the question, the first thing that you must quickly identify is which competency is being...
Financial status of the company.
Sorry?
Financial status of the company.
The financial status, but in the context of risk to your business. And in this case, we are talking about what? Interest what?
Interest rates.
Interest rates. So of these ones, which one do you think is correct?
And there is a lot of noise. I think it's gearing.
Speak.
Yeah, it is gearing. You are correct. Thank you so much. You can then mute. All of you can then mute. Yeah, it's when I unmute everyone, it becomes chaotic. Thank you. I like chaos sometimes. It's fine. So it's gearing. Remember what I explained earlier on. It's running your business through borrowing. So you're actually paying interest. The bank comes back, and when the bank increase their interest, or through the Reserve Bank, through the repo rates, they review the repo rates and the interest rates increase, all of a sudden you are exposed. So from a procurement person, from a procurement point of view, we need to understand the balance sheet. Now let's look at outcome 3. Understand compliance issues when sourcing from suppliers. Now, compliance is one of the risks that procurement must manage. You don't only manage processes, but you also anticipate risk and we manage it. Now, according to this, we are looking at different sectors, which is your public sector, your not-for-profit, and your private sector. Then from there, you look at the legislative and the regulatory environment. Every business operates within a regulated environment. So from a procurement perspective, in your organization, you must understand who regulates our business and what is it that we need to do so that we toe the line. Right now, colleagues that are in South Africa, the POPI Act came into effect from the 1st of July. Now, from a procurement perspective, you need to understand how we're going to be sending out our tenders now. What impact is it going to have? How is it going to affect our tender evaluations? In terms of, it has always been the practice that when we are sending out an RFQ or a tender document, we say to the suppliers, also submit references, contactable references. That is a big risk now, because I can't give you references because of the POPI Act. Now, as a procurement person, how are we going to satisfy that need? So when the landscape is changing, the regulations change, procurement landscape also changes likewise. And in this instance, we are also looking at in terms of the data protection laws, the ethical practice. In the past, I once had a discussion with a friend of mine. I'll not share the name, otherwise you start connecting the dots. Then he said to me, procurement is easy. And I said, how easy is procurement? Says, no, negotiations, you guys are complicating easy stuff. They said, please explain to me how easy this thing is. This friend of mine then says, get a quotation from somebody else, okay? Now phone the other one and say, can you beat this price? And I said, you have simplified this thing, but we are trading in dangerous grounds. That's highly unethical. So when you are looking at regulations, you also need to look at issues around ethical practice. In the course of doing business, is this acceptable? Okay. You also need to look at issues when you're dealing with issues around regulations. You also need to look at issues around health and safety. How are our processes contributing to health hazard? Are we not promoting slavery in a way, in the way in which we do our business? All these are regulations. How far do we get the information and validate the information during the procurement process? Which kind of information can we get, and to what extent can we use it? Can we visit a supplier to verify certain information? If we are to visit a supplier, what kind of regulations are you supposed to be aware of? And also, what sector am I in? I like to believe we've got colleagues here from different sectors. We've got colleagues maybe from the not-for-profit businesses, okay? We may have colleagues from private sector organizations and public sector organizations. Every sector has got its own regulations. In the private sector, we often talk about competitive tendering. It's written down. If you don't follow that, that procurement process is actually invalid. You can go to any court. It can actually be confirmed that that process is invalid because it did not follow certain laid down regulated processes. In the private sector, every organization also has got its own policies, your procurement policy, your procurement procedure. In the event that you don't follow that, what would be the implications? The not-for-profit businesses, they are also funded. They've got a constitution that they follow. Now, in the event that you don't follow that, you don't toe the line, how is it going to impact the procurement decision? So at the end of the day, we are saying procurement is a highly regulated function, but for us to execute, we need to understand those regulations. Okay. This is an example. This example here might not reflect what happens in different environments, particularly in terms of the number of days, minimum number of days a tender must be advertised. It can also be limited by the spend, their thresholds. It can also be limited by the regulation within that country. It can also be limited by your own policies. But the bottom line of having this minimum number of days is to allow a fair and a competitive process, to also allow the potential bidders enough time to research and respond so that they give you a value for money proposal. Right. So we need to understand that. And also, apart from understanding the personal situation of the supplier, you need to understand the financial capacity and the professional qualifications. Now, how does this help us in making those informed decisions? Remember, I say it is regulated environment. Because it's regulated, it's not easy to get some of this information. Actually, in the South African context, it will not be easy now to get some of this information because of the regulations. Okay. And one of the things that you also need to be aware of in this outcome is the difference in each sector objectives. The private sector's main objective is profitability. So everything that they do is governed by profit. The policies that they put together, they are governed by profitability. That's the main driver. Okay. In the public sector, on the other hand, the public sector is more driven by service delivery. The regulations, they are also aligned to service delivery. In the not-for-profit, because it's funded, in as much as it's not for profit, because it's funded, they do business on the goodwill of the members. So transparency is one of the key elements of the third sector organizations. And third sector organizations also include such organizations as professional bodies, just like CIPS. It doesn't mean that CIPS should not get revenue. It's not for profit in the sense that it's for a good social need. Now, if all of a sudden everyone who is practicing in procurement is competent and they are doing a good job, it is good for the economic growth in any organization or any country. So it's good for the economy, it's good for the country. If everyone toes the line and there is no corruption in the way in which procurement is undertaken. So these regulations are critical in each sector. Okay. My eye is on the clock as well. I also want us to look at some of these regulations in the context of international procurement, where you've got suppliers scattered all over the globe. Now, there are documentations that are exchanged between parties that facilitate trade. And these documents, they work as, they are regulatory in nature and depend on what kind of shipment or what kind of procurement process you have followed. Let's say, for example, you buy these goods and you're buying them from Europe, as an example. You need now to observe the regulations within the European Union. So it means as a procurement person, you need to understand the guidelines around that. And even in terms of the customs clearing of those goods, the movement of those goods, what kind of documentation are required. Let's come to Africa. You buy goods within African states. What are the regulations at customs? What kind of documentation is one supposed to produce at customs? Okay. Now, there are certain documentation that, regardless of where you are buying from, they are standard. Like your document of origin, it stipulates where the goods originated from. You may have bought these goods from one part of the continent, let's say in Africa, but actually they originated from East, or they originated from the US, or they originated from Europe. So that document of origin then will stipulate where the goods originated from. You also, the same documentation will also help in terms of calculating your imports, duties, and your tariffs. Okay. Each country has got its own policies in terms of imports. Certain goods, they attract high tariffs because each country wants to protect its internal goods, internal industry. So as a procurement person, you must understand these regulations so that you don't find yourself in the wrong side of the law where one is now doing smuggling of goods. and as a procurement person is the last thing that is expected in a business. Even the payment terms, the way the payments are administered, they are different when you are buying goods from local suppliers. In here, you need to devise a way of how you are going to pay these, pay for these goods, okay? Either you're going to use your letters of credit and stuff like that, but there's risk associated with it. The banks, the Reserve Bank gets involved in that process as part of their balance of payments reporting. So as a procurement person, you need to understand that. The use of Incoterms, if you're buying goods from other countries, they help you to define the contract. And there are quite a number of these Incoterms. They've been revised recently. Understand how these Incoterms will impact the procurement process. They are clustered into different categories, but their whole essence is to regulate international contract of purchase and sale. They also help in terms of apportioning responsibilities. Who is responsible? The buyer or the seller? Where does my responsibility end or start? So these Incoterms, they help to define that. And also in terms of your customs and control and clearance stuff, it's important from a procurement perspective to understand those regulations, which documentation, which goods am I going to use? We all know, I'm assuming that we know such documents like your bill of lading. You buying goods from Europe or from China, they're still going to take another 3 to 4 weeks sailing on the seas and only to receive them. According to the supplier, immediately they've issued a bill of lading. Whatever happens to your goods in transit, the supplier still wants their money in full because they've already issued a bill of lading. A bill of lading is a document of receipt, even if you have not physically received the goods. So understand these regulations when doing imports, okay? Even the currency regulations, it's important because it's very easy then to be classified as money laundering in these instances. And the applicable law, we are saying, which law is applicable? The international law, is it our law? Which law is going to govern this contract? I've got a contract with the supplier in China. Whose law is going to govern the contract? In the event of disputes, how to fix those disputes? So you need to understand that. Otherwise, by law, the law that becomes applicable is where the contract was signed, where the contract was finalized. So if the contract was finalized in China, it means the law that is going to be applicable is the law from China. So these are some of the things that are critical when we are doing procurement from international suppliers in view of the key legislation, the regulations that govern those business trends. Okay. I'm not going to go into full detail on some of these elements. That's what probably I was talking about here. I tried to cover this in advance. All right, let's try and look at this question. It's a very long question. A procurement organization is a complex and a very high spend requirement for which there are many suppliers, all with capacity and a desire to deliver the contract. Once awarded, the contract can be easily switched to an alternative source of supply. Price is just one consideration, but other more qualitative factors are also important in deciding which supplier to award the contract to. Which of the following describes the characteristics of the item and it provides the best method for awarding the contract? A, leverage and competitive tender. B, strategic and e-auction. C, routine and supplier negotiations. D, bottleneck and framework agreement. Remember I spoke about the Clausic matrix right at the beginning. And I said, the way you plot the goods and services in the 4 quadrants is not a thumbsuck. It's a function of your supply market analysis. It's a function of your spend analysis. It's a function of your market structures. Now, here is a scenario. What do you think is the correct answer? So we need to understand the context of the question. All right? A procurement organization is a complex and a very high spend requirement for which there are many suppliers, all with capacity and a desire to deliver the contract. Once awarded, the contract can be easily switched to an alternative source of supply. Price is just one consideration, but other more qualitative factors are also important in deciding which supplier to award the contract to. Which of the following describes the characteristics of the item and it provides the best method of awarding the contract? Leverage and competitive tender, strategic and e-auction, routine and supplier negotiations, bottleneck and a framework agreement. We need one way that you can apply it to exam. Okay, maybe just 1 minute. One way. Yes, ma'am.
I think I will go for a leverage and competitive tender.
Yes, me too.
Yeah, I wanted to. Yeah.
I'll go for B.
Why are you going for the ones that we are going for?
I'm going
Leverage
for B
and
because this
competitive.
is high spend and high risk. I mean, we're talking about complex, whether service or goods. We're talking about high spend here. Yes, you might have a number of suppliers, but there are other factors as well because, you know, do those suppliers comply with all other factors in terms of your quality, capability, capacity, you know, all those.
So what is your answer?
It's B.
I agree. So what you need to do, understand the question. Understand the question fully. This question is saying the supply chain is very complex. And the spend is what?
Very high.
It automatically eliminates C and the D.
Yeah.
But because complexity is very high, it also eliminates what?
Leverage.
The leverage.
Oh, okay.
So when you answer these questions, understand which competency is being tested here. Don't rush into answering. Which competence is being tested? And do I really understand it? You can actually use elimination like we have done. Eliminate the first, these ones. We have already eliminated them because you know. Then you are now zeroing in on that. You go back to the question. You understand again. All right. Okay. Yes.
I have a bit of a concern.
Yes.
When you look at the description or the characteristic of a strategic item, it has to be a high profit and a high risk. Nowhere in this document or in this scenario are they talking about the profit impact. They're just talking about the complexity and they're also talking about the high spend.
Yeah, that's yeah, okay, let me interject. Yeah.
Okay. To me, I would go with A because as you read further, it says the contract can be easily switched to an alternative source of supply. And that's competitive tender. If one person doesn't satisfy you, you can easily go to the next person. So I don't know. When I read this, I see leverage and competitive tender.
Okay.
True.
Maybe all right.
If I can just add on that. Ask. It also says price is just one consideration.
Yes.
no qualitative factors, which in auction, dealing with price, if I'm not
Yes.
Okay.
other factors.
I hear you, but understand the context here. The organization has a complex and a very high spend requirement for which there are many suppliers. So it doesn't mean that strategic commodities, strategic supply, strategic goods and services that fall within the strategic quadrant, there are few suppliers. It doesn't necessarily mean that. It's an informed decision that you need to take as a business. Either you do multiple sourcing or you do few suppliers on that, depending on the complexity of what we are buying. If the switching costs are very high, you cannot switch even if you can. If the switching costs are very low, you can switch from supplier A to supplier B, still under strategic supply. Here is not about high, maybe you use a different word, not very high spend. You use the word profitability. It's not about profit. It's about your spend.
Hello.
No, Ronald, can you please go to page 8 of our book? The study guide 8.
Yeah.
It's clear to say the left-hand side. Okay, depending how you put your quadrant.
Yeah.
The profit impact, it's there. It says it's a profit impact that is either low or high. And you are saying it's not the profit impact, it's the spend. Now, which is which? Because if you are to look at it and you're talking about the spend, then I would say maybe I'll go with B. But if the book talks about the profit impact and I'm reading this case study, then I'm still saying I will not go with B.
Okay, I hear you. The question is about spend, it's not about profit. And this question is done in such a way that even people in the public sector are able to answer it. Hence, the emphasis is on spend other than profit. The question is referring to spend, not profit impact, but spend.
And maybe not bottleneck then, because the profit impact is high there as well, irrespective of the actual spend.
So you're saying it's the bottleneck?
No, I'm not saying that. All that
Okay.
I'm trying to explain to my colleague there.
Yeah. You need to understand the characteristics of the Clausic matrix. The characteristics of Clausic matrix, when do we say this is leverage? When do we say this is strategic? When do we say this is routine? When do we say this is bottleneck? There are a number of issues that get involved, and one of them is the market structures. In here, you can actually see the market structure. The market structure here is what? What is the market structure here? There are many suppliers. What market structure is this? This could be a perfect competition, eh?
Yeah.
There are many suppliers. So immediately there are many suppliers. Bottleneck falls out. Leverage is a contender because it thrives on many suppliers. Hence, I understand where your argument is coming from. But also look at it now in the context of what the question is, the background information that we've been given. There's a high complex and a very high spend requirement, even though it is in a market which is dominated by many suppliers. And also we can switch. Switching is not a problem. Okay. But switching doesn't negate complexity and doesn't negate high spend. I hear you in terms of leverage, but look at the characteristics of leverage. Leverage is high spend, low complexity. That's what leverage is. And in this case, you've got high complexity. Does this make sense?
No, it's just saying it's complex. It's not saying high or low. No, Ronald, no.
Hi, Vasitsan.
But we have claimed. So
Okay, that's fine. Let's agree to disagree then. It's fine. All right. Let's move to outcome 4. Outcome 4 is about understanding ethical and responsible sourcing. Now, there are 4 sub-outcomes on this outcome. Describe the impact of international ethical standards on procurement and supply. Identify practices that support ethical procurement. Compare the use of audits and other feedback mechanisms to evaluate ethical standards in the workplace, and contrast processes and practices that the organization could adopt to meet the requirements of corporate social responsibility. Now, looking at the impact of international ethical standards on procurement. Bribery is one of them. Corruption is one of them. Fraud is one of them. Human rights is one, and modern slavery. I once said to another group of people that I was discussing with these topical issues that there is a problem when it comes to defining these elements. There are issues of culture that comes in, all right? I'm just throwing some spanners here deliberately. There are issues of culture that comes in. Now, if we fail to define the culture, we are sitting with a big problem when it comes to these elements. The culture that we're talking about here is not a person culture, but is the corporate culture. Every business has got its own what? Code of conduct, am I right? So discussing these elements outside culture can become very tricky. And whose culture anyway? When do we say this is a bribery? How easy is it that a salesperson is given a budget to go and entertain customers? How do you define that entertainment? Is that acceptable? But this company has got a budget for salespeople to entertain customers. And who is the customer? It could be a buyer on the other end. So when we deal with the issues of bribery, corruption, fraud, human rights, and modern slavery, the first thing that we need to understand is your corporate culture. What does the organization say? Do you declare? What do you declare? What is your code of conduct in your organization? Stipulate as an acceptable behavior or an acceptable behavior in terms of gifts and hospitality issues. So there are topical issues, but there are certain things that we are saying we need to do, which we can't be seen as promoting from a procurement perspective. Hence, these are standards that needs to be adhered to. Okay. I know when we talk about these issues, it can take us the whole day because it's an issue of perceptions and how people perceive them. And that perception can also be influenced by upbringing, that perception can also be influenced by the organizational culture. That perception can also be influenced by your professional belonging, your professional body. That perception can also be influenced by the maturity of your profession. And that perception can also be influenced by other factors such as what other people think. Okay. So when you're dealing with these aspects, they are not easy, but how do you overcome that? Is by having a standard. And the standard can be in a form of your organization code of conduct. It can be in a form of your professional code of conduct. Like I would like to assume all of us, we have signed the CIPS code of conduct. That helps to define these elements because they are contentious issues. The way I define ethics is not the same way the other person would define it. Modern slavery, procurement, how do we promote modern slavery in this environment? Is buying from the lowest supplier promoting modern slavery without checking why they are the cheapest. Can I promote that? Because they might be underpaying their workers. They might not be giving their workers protective equipment. They might not be doing certain things that other organizations are doing as their prices are slightly higher. But as a procurement person, because I'm blinded off by the cheapest or the lowest price without checking other information, am I promoting modern slavery? So there's quite a lot of information that as procurement people, we need to do as part of our due diligence to deal with these standards. Okay. All right, you guys, you can read this as you prepare for your exams. Let's look at identifying practices that support ethical procurement. Now we have looked at what it is and how contentious that can be, where people that cannot arrive to a one acceptable definition of what is right or wrong. But here are some of the practices that can help us to do that. The application of the CIPS Code of Conduct, which I assume we have probably gone through, and as members of CIPS, you have also obliged to support. And if you are not, it's time that probably we elevate that. So that can help to deal with the issues of an ethical practice. And also other aspects are ethical code of practice within organizations or professionalizing the profession. Colleagues that are in South Africa, you may know this, you may not know this. Maybe Sari can, if she's still part of this meeting. There is a strong drive to professionalize SCM. And this is going to be a statutory, it's going to be, there's going to be an act of parliament that is going to govern the practice of supply chain in South Africa with a license to practice. And this is coming very soon. The code is going to go through parliament and then we have an act of parliament. Just like engineers, just like medical doctors. If you don't have a license to practice, you cannot practice. So those are some of the ethical codes of practice through professionalization of the SCM. I'm not sure what is happening in other countries from other colleagues, but watch this space is part of dealing with an ethical practice. Pre-qualification as assessment criteria. Today, you talk of their perceptions, you talk of, I mean, you read in newspapers, listen to media, the first thing that you get is there's corruption and there's a procurement person behind it. Okay. And some of this lies in various aspects. And it impacts on the social side of people, environmental and economic. So by applying your pre-qualification and assessment criteria, we are saying there are ways in which we can start dealing with the issues of modern slavery. And how to deal with the issues of modern slavery? By applying the CSR policy, which is covering your social, environmental, and economic aspects. So when you evaluate suppliers, you evaluate them on the basis of the 3 Ps, or the triple bottom line. Some know it as that, instead of evaluating them on the basis of price, because that is a tendency of driving modern slavery. Due diligence on suppliers and risk assessment. Now, due diligence is, who are we doing business with? Do we know? In many cases, procurement, because we are operating procurement as, by the way, lastminute.com, reactional to a problem, and we don't do due diligence. The risk might not lie with our immediate supplier. The risk might actually lie with our second, third, fourth tier suppliers within the supply chain. And that's where corruption happens. But by doing business with this supplier, we are actually promoting that practice. So due diligence is part of a measure of dealing with an ethical practice in procurement, which may happen in your third tier, second tier, fourth, fifth tier, down the supply chain stream. So for us to overcome that, it means we need now to do what we call proactive procurement plan, so that it allows you to do supplier visitations. It allows you to get all the information that you needed to get, credit ratings and stuff like that, whilst this doesn't become a crisis in your organization. You know, the language in procurement is, we have run out. When people say we have run out, we all run around. We forget that there are certain things that we need to do. By the way, corruption thrives under crisis, all right? People create a crisis so that these things, they can be executed. Because procurement is an afterthought. It's like everyone was not there. All of a sudden, we need to be, then we don't do the due diligence. Supporting information on ethical practice in supplier quotations. Now, is it an issue of name and shame? How do we do that? Can we send a questionnaire to the suppliers to verify certain information? Can I also encourage you, I know you're still students, can I also encourage you to undertake your CIPS ethics test? Some of these elements will be covered there in detail. If you do your CIPS ethics test, it will take you about 1.5 hours to undertake that test. You'll see the stuff that I'm talking about. Send suppliers questionnaires to solicit for certain information so that you understand exactly how they undertake their processes. Okay. Contractual clauses in the contract, they must also be looked at as a measure of overcoming unethical practice. It takes two to tango. You can't say the supplier, the buyer is corrupt without saying the supplier is corrupt. So then have contractual clauses that ensure that should the supplier be seen to be forcing the buyers to be unethical, and we can prove that, that supplier can be debarred, that supplier can be struck off we'll stop doing business with that supplier. So let's communicate these issues, and these contractual clauses are there in the contract. Obviously, one of them, one of the aspects is supplier monitoring. How do you monitor suppliers? Visiting suppliers is good practice. Monitor their tendencies. You can actually get early warning signs. It takes two to tango, as I said. It's impossible to have a buyer corrupt without a supplier being corrupt, because these like them, they attract each other. A corrupt buyer will look for corrupt suppliers, and corrupt supplier will look for corrupt buyers. That's what it is. So as part of our practice, it's name and shame, highlight these issues, visit the suppliers. Don't visit the suppliers at Mark and Bean, because you learn nothing from them. And obviously develop the KPIs that will help us to measure some of these tendencies. Okay. Let's look at outcome 3. Compare the uses of audits and other feedback mechanisms to evaluate ethical standards in the workplace. As I said, one of the audits processes that I practice in procurement myself for so many years, and some of these things that I talk about, I actually put them into practice. Visit suppliers, have your checklist, okay? But what is important is when you visit these suppliers, what information are you looking for? Be transparent with them and report back the performance. And encourage dialogue with suppliers on improvements to process. I mean, it's your suppliers that will make you successful, and it's your suppliers that will also bring you down. So from an ethical perspective, be transparent, create that dialogue with suppliers. And even the issues of anonymous calls, issues reporting crime, reporting unethical practice, make it clear to the supplier that this is what we are going to do, and protect everyone in the chain. Recommend remedial actions where appropriate, and some of the recommended remedial actions could be, we'll stop doing business with you should we prove that we are perpetrating unethical standards. And let's identify the areas of conflict of interest as some of the elements of undoing. By the way, unethical practice is costing people lives. It's very expensive. CIPS once did a research, I think 2-3 years ago. Countries in Africa, they lose almost about $148 billion US through corruption. Now, that's a lot of money that through good procurement practice, we can plow that money back into the communities. Contrast processes that the organization could adopt to meet the requirements of the corporate social responsibility. Now, the first thing that we need to understand is what is social corporate responsibility. Corporate social responsibility basically deals with a balance between 3 competing needs in a business. The first one is profit for those organizations that are in the profit business. And the other one is people. Are we people-oriented? And the other one is planet. Are we environmentally oriented? Now, in the event that the organization does not have a good balance between the 3, and there is no support from the executive in an organization, there is no way procurement can prioritize people and planet, because the culture in an organization is not supportive of those 2 elements. The first one is easy. That's what everyone is doing, which is profit. But people and planet, it means now how do we promote this? We promote this right from the supplier selection. The way we select our suppliers, we build in the elements of sustainability in our supplier selection. And we also evaluate those elements, and we monitor and we report on them. People, it's about the social aspects. Okay. Is it profit anyhow at the expense of people's lives? Is it profit anyhow at the expense of the environment in which we operate in? Do we use sustainable sources of energy? Do we use sustainable sources that will create life for the next generation? So procurement it is our prerogative to drive this practice through our supplier selection. We start integrating it in the way in which we are selecting suppliers, and we are able to monitor throughout the procurement cycle. Remember, it might not be easy to do that from a procurement perspective without the business or the board of directors or the big shareholders also buying into it. But there are a lot of advantages that come with sustainable procurement in this environment. But from a procurement perspective, let's control what we can control, start building up this. So this is how it can work. We build it in the specifications. We build the sustainable requirements in the terms of reference, in the RFQs, in the tender documents. We build them again when we are evaluating these tenders, and then we build them when we are awarding the tender. We also build them when we are managing the contract through the KPIs and the contract deliverables. And then we measure, report, and manage throughout the whole life cycle, integrating aspects of sustainable development. All right. I want us to, I'm not sure if there's no question at the last. I've exceeded by 10 minutes. This was one of those long modules. Is there any question?
No, thank you very much on my side. Thank you.
No questions.
Thanks a lot, Ronald.
Thank you very much.
Thank you. No question.
Thank you. No question at the moment.
Okay.
Can you please get the slides if it's possible, sir?
Thank you so much. Let me stop sharing and see. Okay.
Ronald, yeah, we've got Margaret and Sandile with hands raised.
Okay. Please, you can proceed. Those, I can see the hand. That is Sandile. Sandile, you can proceed, sir. Your hand is up.
Thank you so much, Ronald. It was an informative session. But however, is there a better way to just to claim the input terms? To struggle with them.
Okay. There's no room for cramming. Don't cram anything, you must understand. And the questions will really not drive you to cram. You'll never find questions that require you to cram. The questions, what they are looking for is understanding and application. So don't cram anything, please.
Pardon me, but I think maybe he meant to say, are there acronyms you'd suggest to help us remember during the exam?
I don't know how the exam is going to come. And in many cases, very few instances, you find acronyms. But if there are any acronyms that you might need to understand, you may need to understand them. But there are very few instances where you have questions in acronyms. It could be one or two, but it's not the main subject.
Okay. Hello, Ronald. Hello,
Yes,
Ronald.
Yes, I'm listening.
Can you please explain to me the difference between currency hedging and GBP sterling?
Between what, ma'am?
Currency hedging and GBP sterling.
Currency hedging. Okay, what currency hedging means is let's say you are buying goods, let's say, for example, you are buying goods from China, and the supplier charges you in US dollars. But because you know that the exchange rate moves so fast, it can move to your advantage, it can move to your disadvantage. And let's say the goods that we're going to buy from China, we're going to cost you 10 US dollars. From a supplier in China, they still want you to pay 10 US dollars. But at the time when you agreed the contract, the exchange rate to rand to the US dollar, may say, was 15. So you multiply 15 times 10. So it means you're liable for 150. Okay. But at the point of making the final transfer to a supplier, let's say the rand has weakened. It's now, let's say, 20 to the US dollar. So your liability is now 200 rands. It doesn't mean that you are going to pay the supplier more. It's only that you are going to buy that US dollar component higher than it could have been. So then that translates to exchange rate loss on your side. So the currency hedging then says you can actually buy these, secure this payment at the time when you secured the contract at a rate of 15. So you are not going to experience any fluctuations. So that's currency hedging. Now, British sterling pound is the currency. It's just like the rand, it's just like the US dollar, it's just like any other currency. So you need to understand my goods, which currency is going to be used by the supplier. If, let's say, you are going to be using this British sterling, which is the pound, then look at the exchange rate to the pound against the rand. It's usually higher than the dollar. I think it's about 18 to the rand. So calculate your expenses based on the rand, on the currency in which you are quoted by the supplier. I hope I've answered you.
Thank you, sir.
Thank you. Any other questions? I see their hands. Basetsana, your hand is up.
Okay. Earlier on, you spoke about the POPI Act and evaluation of bids. So you spoke about, normally what we do is we would require a reference letter from suppliers or from bidders to say, prove to us that you've done this work before. Now, you mentioned the issue of the POPI Act, which is something that is now going to be, I don't know whether it's scrapping that out or I'm confused.
Yeah, it's true. That is no consequence anymore going forward. The supplier, the person that you are requesting reference from can actually refuse to give you the reference under the POPI Act. So what it means, yeah, that's what it is. So what it means, you need to go back to the drawing board in your organization. I hope, I'd like to understand you also have got your POPI compliance policy.
Yeah, no,
look at that from a procurement perspective. How is it going to impact the way we are doing procurement going forward? References, you may not get references anymore because the people that you are going to be getting references from may actually refuse to give you those references because they are not obliged by law. And rightfully so, they are not. But they will say, what am I going to use my letter for? I need to know.
So does it mean we must also take out the references under CVs?
Yeah, that's exactly, because they've got no legal consequence. Actually, they are exposing your business now. From a POPI Act, remember there's a jail term of 10 years.
Yeah, all right, no, thanks, thank you.
Yeah, so look at your procurement processes, policies. They must be POPI compliant going forward as of the 1st of July.
July, yeah. All right. Thank you. Thanks, Ronald.
Okay. Any other question? Kingsley?
Okay, my question is with regards to the previous question that was asked by my colleague in regards to the issue of currency rising, whereby you were explaining something about the exchange rate And so I don't know, I just want to confirm or to know, is it really necessary to do a research on that field, especially if you want to focus on maybe passing this module? I understand that maybe in the field or in the profession, it might be necessary, but for the sake of exam, is it really necessary to do a research so that you know about it? Is it an exam area?
No, not necessarily. What you need to know is the implications, because then that derives either exchange rate loss from a procurement perspective or exchange rate gain. It can work to your favor, it can work against you, but you don't need to do an extensive research. The content that you have in the CIPS module is sufficient to help you pass the exam. But if you want to do it for your own other needs, yes, you can.
Okay, thank you so much. I was so worried because I've never came across that under the module, so I was a bit worried.
Okay, no, that's fine. That's fine. Can I see any other hands? I see Ribologe.
I have a hand raised here.
Good evening, Mr. Ronald.
Yes, sir.
Is it possible to get the slides after this session?
Unfortunately, no. Sari maybe can respond if she's still with us. The reason is we have a collaborative arrangement with CIPS, and we are supporting as study centers. We are just supporting students preparing for their exams. So we agreed that the recording can be shared with the students, so students can also join these sessions at no cost. But when it comes to sharing now the content, I don't know how each study center would deal with it, but CommerceEdge is not in a position to share the content. We share this content with students enrolled through CommerceEdge. But for this, you can benefit with the recorded session. Sari, maybe you want to make a comment.
Yes, colleagues, it is a prerogative of each study center on how much of their intellectual property they are willing to share, because they have agreements with their students. And in certain cases, it might cause conflict if they share their IP with us and their own students have paid for it. So Ronald was gracious to share this model through us and answer your questions, and the recording will be made available via our webpage and YouTube. We will share the link with everyone as soon as it's been posted, but the physical slides we won't be able to share. But Ronald, I'm sure you can confirm that the notes you shared would refer to the study guides. There wasn't, there isn't extraordinary special content that they won't know, but it is available via the recording if you follow use it as a reference. I hope that's clear.
Yes, precisely. If you check, the content is designed exactly according to the CIPS course book. Yeah, but we've got more detailed content on our learning platform, which is more detailed than what probably we're getting.
Ronald, we had a brief, overpeak of the LMS CommerceEdge has, and they would have like 60 revision questions for students to work through on the online platform. It's an excellent learning management system that schedules your sessions and helps you work through the content. But obviously, there was massive investments made in this technology and these platforms. So that is available to students who enroll with CommerceEdge.
Yeah, so we are willing to share, but outside probably you need to send an email. I think Sari sent you an email, Julia's contacts. We have done a lot of research around this. Like each module, there are almost about 160 to 180 questions typical exam questions that rotate through and through. But that's the value add that we have for students enrolled through Commerce Edge. But for the purposes of this session, you can, I think you'll get this recording. You can listen to the recording time and again, and also make use of your CIPS course book to prepare you for the exams. I'm confident you'll get it right, but you just have to read. Don't cram. Read, pray, and go to the exam. Don't pray without reading and hope for a miracle.
Hi, Ronald.
Thank you very much.
Yes, Glenda.
Hi, Ronald. Please tell me, is this available on Connect?
Oh, yes, it is.
The revision material.
It is. Yes,
Okay,
it is.
great.
Yeah. Yeah. And there's much more. If you are a Commerce Edge student, you should have done your green test right now and your mock exams.
Yeah.
If we,
Yeah.
we have seen them, eh? Okay.
Yes.
Cheryl, I'm just going by list here. I'm not sure. I hope I'm not going to.
Thanks,
I was
Ronald.
looking at the power bank, but it doesn't work.
Thank you. Bye-bye.
Bring it here.
Okay.
Hi, Ronald. Ronald, can I ask a question?
Okay, Cheryl, proceed, Cheryl.
Okay, thank you. I just want to ask for clarity on trade blocks, and obviously I know that you're an expert in procurement, and maybe you can clarify. In the course book, it refers to common markets and free trade areas. However, I feel that the course book hasn't really elaborated enough, and the explanation seems similar. So I was wondering if you could perhaps give some insight or expertise or knowledge on that. Trade blocks, common markets, and free trade areas.
Yeah, I mean, free trade areas. I mean, each like, let me use a classic example. In Europe, we had a trade bloc, the EU. All right. So what it means, all member states within the EU, they've got preferential trade agreements with them. Hence, goods, they move freely between the member states.
Okay.
Okay. And then in Africa, we have the EU bloc. I think, not the EU, we've got the East Africa bloc. I think it's COMESA. And then in West Africa, we also have another West Africa economic bloc. In Southern Africa, we've got the SADC. And then in East Africa, we have. And currently, I think almost the highest majority of African states have signed up to an Africa free trade zone. So those are blocks now. Those economic blocks, what they do, depending on the level of maturity, they actually try to promote trade amongst the member states to the extent that even the tariffs of goods that come from the members within the SADC are not the same as the goods that come from members outside the economic bloc.
Okay, so it's basically just split the two blocks for the different regions then in the course book.
Yep, yep.
Okay, perfect. Then that makes more sense. Thank you, Ronald.
Okay, that's fine. We need to be closing now. I need to go by the list. Mahadi.
Thank you, sir. I just wanted to make a follow-up on the POPI thing. So you're saying that the service provider can sort of deny giving the reference letter. However, in the procurement process, by the nature of it, there's so many personal information that is being collected through a procurement processes. If you look at it, reference letter is just a tip of it. And my understanding is it's only, the law only prohibits using the information other than for the purpose it is collected for. So I don't understand why would somebody who wants to bid feel like a reference letter is a restricted information, whereas they're giving their ID, their tax matters, and all those information.
Yeah, sure. Remember, it's only you who knows what we are using the information for. I don't know. So the Act, you must have by now, If you don't have, please check with your organization. You must have a POPI compliant procurement policy in your organization and procedures right now. If you don't have it, that's dangerous if you're in South Africa. Because it can impact your procurement processes in a big way. So I'm just giving you free advice here. Ensure that you have a procurement policy, procedure, and process that is POPI compliant. It's only you as an organization that know what we are using the information for. As an outsider, I don't know. So if I don't know, I need assurances. That's where now the policy comes in. I hope I've answered you, ma'am.
Yes, sir, you did. Thank you.
Thank you. Rashimi.
Hello, Ronald. I just wanted to make a comment to the gentleman that spoke about hedging. On page 196 on the glossary, it just gives a definition. I think that's all we may need to know for the exam. It just speaks about hedge and it gives a definition, and that's basically it. Thank you.
Yeah, thank you so much. Yep. So you need to understand the definition in the context of the content.
That's it.
Cool. The next hand is Iris.
Thank you. Thank you so much.
Hi, Ronald. I just wanted to raise something also around the POPI, but the lady that just spoke before me had asked part of the question. But I'm based in Mozambique, so I wanted to know, we do a lot of business with South African suppliers and other foreign suppliers. We don't have an act yet in Mozambique, at least that I know of. I heard of the South African Act sometime last week. So I just wanted to know, how would we proceed in such cases? Or do we have a global standard act around the referencing?
Okay, that's an interesting one. What happens is every law is applicable in the country of its jurisdiction. So the POPI is applicable within South Africa. But because we are dealing on international business, then the international law comes in. Remember what I said earlier on, that it depends where the contract has been signed. If the contract is going to be signed in South Africa, okay, if your suppliers, as you are saying, your suppliers are here in South Africa and the contract is going to be signed in South Africa, what that means is a South African supplier is obligated by law to comply with POPI, even if it's dealing with a company in Mozambique. But if the contract is going to be signed in Mozambique, that law may not necessarily be binding to you because the contract is signed in Mozambique. So there are quite a bit of thin line between that. But as long as the contract is going to be signed in South Africa, what it means is in the event of a conflict on that contract, it is the South African law that is going to be used to address any contractual issues because the contract is signed in South Africa.
Okay, understood. Thank you.